Trayvon Stevenson hit the nail on the head. This moment in crypto isn't about hype. It's all about responsibility. He's basically saying the quiet part out loud. Too many people want gains without understanding the game. The market is changing. Regulations are tightening. And the era of blind speculation is over. What he's pushing is awareness. If you're going to be in crypto, you need to actually know what you're holding, why you're holding it, and what the long-term value is. Bitcoin, Ethereum, new layer ones, they're not lottery tickets. They're evolving financial infrastructure. Trayvon's message is a warning and a blueprint. Learn the fundamentals, stop chasing noise, stop following influencers who can't explain anything past price action. And most importantly, build a strategy that works whether the market pumps or dumps. Crypto isn't a shortcut, it's a skill set. And right now, only the people who take it seriously will survive the next cycle. Let's check out this clip.
The crypto bull market is about this close from being all over, and it could honestly go either way. So this is a video that I've been excited to make all week. Currently right now it's November 6th. If you're watching this, I'm probably going to be uploading this on November 7th. And I wanted to tell you guys that there is a lot of interesting information going on in the crypto markets and on the charts as well. As you can see here on the chart, I have the Bitcoin chart pulled up, and I also have the 50, the 100, and the 200-day moving averages pulled up. And I want to explain something to you guys, right? So now we're kind of crossing below this 50 week. And as you can see here, all throughout this particular cycle and last cycle, whenever we've crossed over that 50-day moving average, it's usually been a pretty good time to buy Bitcoin. The problem with this is right now is that when we crossed over it last cycle, as you can see here, we actually dropped into a bear market. We didn't initially go all the way down. We obviously had a retest at the 50-day moving average, and then we fell into a prolonged bear market, right? The problem with this is right now is that we're actually currently under that 50-day moving average. You can see right here that the 50-day currently is at $102.949 thousand, and we're currently sitting at 100.8. So we don't want to close the week below this number. So by Monday, we want to see this cross back above the 50-day moving average. And if we were to spend a prolonged time below these levels, like I'm talking like 3 weeks or so, 4 weeks or so, it might be that the cycle is over. Now, I don't want to alarm anyone yet because we're still in this situation where it could honestly go either way at this point. So I don't want to freak anybody out, but this is something that has persisted over the last couple cycles. Now, even coming into the last cycle, you can see that we tested this range a few different times before we actually had the breakdown over here. Now, this is obviously the 2021 cycle, and this is when we had that dip during the summertime and in fall. And you can see that we tested this 50-day moving average, and Bitcoin has always respected this 50-day moving average, especially when the market started to mature going into the future. So I just want to make it very clear that I'm not saying the bull market is over. I'm just saying that we're at a pretty critical point, and $100,000 is also a psychological level for Bitcoin. Ultimately, you want to see it get back above the 50-day moving average. This is a post from the Kobayashi letter that I saw just a few days ago, guys, and I wanted to bring it up to you because this is some important information. The million-dollar question, okay? What is happening with crypto right now? Crypto markets have officially erased over $1 trillion of the market cap since October 6th. But why? The answer to this question seems to be more technical than fundamental, which I would agree with. You're seeing a lot of legislation potentially being passed. You're seeing rate cuts happen. You're seeing a lot of positive things coming for macro, but you're not seeing it take effect within Bitcoin's price and the altcoin market, of course. So roughly around 300,000 traders are being liquidated per day on average, and the market has evolved into the most reactive form in history, and Trump posts headlines. Just try to remember this slight piece of information. The long-term thesis is stronger than ever, but the short-term picture points to larger swings in both directions, and leverage is a wild drug. Now, I always tell you guys on this channel, I don't use leverage, and you should also not be using leverage unless you understand what you're doing. You have correct stop losses placed above your liquidation points so that you're not taking these massive 100% losses. Because yes, you can make a lot more money and amplify smaller moves in the market with trades and make some decent money as far as percentage gains, but at the same time, if you have days like this, most people got wiped out on these trades, and a lot of big traders as well got wiped out on these trades. So please try your best not to use leverage. If you are going to use leverage, use safety precautions such as stop losses, and just protect yourself from a lot of these volatile moving assets. Now, something else that heavily affected a lot of the downturns in the market over the past couple weeks or so has also been a lot of the Bitcoin ETF spot holdings and a lot of the outflows that we've been having with a lot of these ETFs. So I brought up a chart that has detailed the last 2 weeks or so, and it's shown that we haven't had a positive day as far as ETF inflows since October 29th, and you can see that over here on the right hand side. Now, when we switch this over to USD, you can see that it's close to $2 billion of ETF outflows over the last 2 weeks, and this has been affecting the market. Now, understand that when one domino falls, the rest of them pretty much topple over, and the fact that we have this uncertainty with the government shutdown, which I'm going to get into in a moment, it's also amplifying this move to the downside. So a couple things personally that I would want to see is the government shutdown end, of course, and I'd also want to see the tariff situation get a little bit of clarity, but we're going to touch on that in just a moment. Now, understand that this has been an institutionally driven market to this point. Retail hasn't really been here, and I'm going to show you a few charts that details that out. And it's also because retail doesn't see any movement in altcoins, right? At the moment, we have a lot of focus on a lot of the bigger crypto assets, especially Bitcoin and Ethereum, but we haven't had the same type of attention on altcoins. Institutions are pretty much waiting for these crypto market structure bills to be passed before they start to delve into altcoins, because there's a lot of things that banks can't do under certain laws and regulations. So having clarity as far as legislation goes is important to see a lot of these inflows of money back into altcoins. You can also look at the Google trends when it comes to Bitcoin. When I search in the Bitcoin term in Google search trends, you can see it here for yourself. We're at pretty much all-time lows. We haven't been this low since the depths of the bull market back in 2022, in the summer of 2022, and in late 2022. So this has also been a great time to buy, but it just goes to show that a lot of people aren't really looking for crypto assets. They're not looking to buy altcoins, and you can see that in the charts and in a lot of these altcoin prices, right? Of course. So when I'm looking at a chart like this, I see retail out the game. I don't see any retail here, and there's also probably a big reason why your altcoin bags haven't been moving, because in prior cycles, a lot of retail has driven a lot of the moves in altcoins. Now I have the crypto fear and greed index pulled up, and you can see that we're currently at a 27. The last day was a 23rd, and last week was at a 34. And when we pull up the max chart on the crypto fear and greed index, anytime we've dropped below 25 or gotten around that 30-point level has usually been a pretty good time to buy crypto assets. Now, if we detail back on the chart down to the end of 2022, you can see here that we're actually at the same level currently right now. We're currently at that, let me see, that 27 mark again. We are bouncing around the 20 to 25 point mark around this point, and it was obviously the bottom of the market and a really good time to pick up Bitcoin and a really good time to pick up other crypto assets as well. So if you're one of these people questioning whether the market's over, I want to tell you something. If we are able to stay above the 50-day moving average, and by the beginning of next week, I think it's going to be one of the best opportunities that you'll ever have to buy crypto, especially front running all the institutions, because once these bills get passed within the next couple months, you're not going to be seeing the same level of access that we used to in crypto, where we were first and we had the chance to buy these assets early before institutions come in and old money comes in and they just swoop up all these assets. And the edge that we used to have in capital markets, we no longer have. So, and just to keep something at the front of your mind, this is a post from Watch Your Guru, and just a fun fact, less than 7% of the global population is invested in crypto. Okay, so you're still super early to this asset class. I don't like how people feel like they've already missed the boat. When you look at a lot of the bigger and larger assets in the stock market, or when you're talking about real estate or commodities, most of these things are up at trillions of dollars in evaluation. And as far as last time I checked, Bitcoin was the only one that was worth more than $1 trillion, more than $2 trillion worth in market cap. Everything else is sub $1 trillion. Most cryptos, like 99% of cryptos, are sub $1 billion or sub 10 billion, we'll say, right? So keep that in mind. We have a long way to go, and once we get more clarity, you'll definitely see these asset prices move upward. Now, lastly, on where I think retail's at and why this could go either way. Okay, so I'm looking at a chart here and have the spot retail activity through trading frequency and surge. So if you look up at this chart here, you can tell you have the red dots, and the red dot pretty much just shows too much retail, as you can see right here. And then you have lighter beige dots around that point, which is many retailer in the game. And then you have the neutral point, right? The neutral point is where you see the gray, right? And whenever we see the gray, is usually when we see almost none to very little retail until you get one of these dots here, right? Where you can see it flash, where you get very little retail in the game. The point what I'm trying to make is right now is that retail doesn't really care about crypto right now. If you haven't noticed, retail is more focused on gold and more focused on stocks, and something until at least last week when we start to finally see drawdowns in both of those assets. But I think there's going to be a rotation coming back into Bitcoin and altcoins. And it shows here that if you're one of the people watching this video, leave a like if you found any value up until this point. But besides that point, you can also see here that you are front running a lot of retail at this point. So this has been one of the longest and most dragged out cycles we've ever had in crypto. It's been painful as hell to be here up until this point. But if we're able to hold that 50-day moving average and we're able to bounce back up off of it, this is going to be one of the greatest bull markets that we've had in history, bar none, because the type of money that's coming in is going to dwarf the entire asset class. We're talking about trillions of dollars, if not tens of trillions of dollars this cycle. And then you already know how I feel about the next cycle. That's when we get that super blow up top and, we change finance in general. So if you needed any more clarity about where we're going right now, we also have the global M2 money supply in the blue, and you can see that it is ticking upward. And then you can also see Bitcoin's price as well. So we've had a bit of a curvature, if you can see that I'll zoom in for you, but if you can see that on the global M2, and that's why we've kind of stalled out as far as Bitcoin's price, because we follow global M2 money supply. Now, more importantly, this green area here, there's a bit of a trend happening here, and this dates back to the first blow off top in the crypto markets. You can see that when we've gotten a big spike in liquidity, which is the green part here, right? The year-over-year growth, we've actually had the tops in a lot of the Bitcoin cycles. So, and you've also noticed that we started off down here where we've had only about, what is that? That's just under 9%. As you can see, the percentage gain got up to around 14%, I guess you could call that. And the percentage gain around 20. As you can see, I'm following these specs right here on the right-hand side. And we've also had a nice trend of a good upward trend on global liquidity as well that mirrored the Bitcoin tops of the last couple cycles. And when you come down to this cycle, we haven't had that because we've had interest rates held on for a lot longer. We haven't had quantitative easing in the markets either. So once all these things come into play, and yes, I do still think Jerome Powell is going to lower rates again come December, even though he said he wouldn't. He's only saying that because he's uncertain with the government shutdown. But once he gets that unemployment data, we're going to see a nice spike in the global M2 money supply, because he's going to be forced to ease rates, because other countries also need to service and pay back government debt. We need to pay back our government debt. Most of the world, if you don't know, trades in USD. So to have a cheaper, weaker dollar is a good thing for a lot of places around the world, because it's cheaper to borrow the US dollar, and it's cheaper for them to exchange their currency into US dollars. So now a little bit more hopium, if that's something that you were needing up at this point in the video, from Watcher Guru. Again, great account. I suggest you go and follow them. Justin, $7 trillion Charles Schwab CEO Rick Wurster says the company plans to launch crypto trading in the first half of 2026. So if we're to be sliding or collapsing into a bear market at that point in time, why would one of the largest financial institutions that we have in America come out with a crypto trading platform? It doesn't really align. I've made similar points like this in previous videos, because most of the time, why would I go in and offer a platform or offer a service for its customers, especially someone like Charles Schwab, if I thought that Bitcoin and altcoins would be sliding off a cliff? No one would touch that particular platform with a 10-foot pole, right? So you have to understand that I'm also seeing a potential top in the beginning, like late Q1, early Q2 of 2026, somewhere in that time frame. That can always change depending on the data or the new data I get, but to expect a full-on bear market by that point, I don't see a lot of these companies launching platforms and investing in crypto like they are right now, if they thought that we'd be going into a prolonged multi-year bear market. It just doesn't add up, and it doesn't make much sense. So the most exciting part about this video and my week was getting the chance to come on here and talk to you guys about the official government shutdown. Now, this is a pretty lengthy thread, but it has a ton of important information that I just felt like I had to share with you guys. So the US government has now entered day number 35, making it the longest in history. Since the shutdown began on October 1st, the government has borrowed $600 billion worth of debt. Now, this is to keep certain functions running while the government is shut down. That's a lot of money coming back into the market. And not to mention, this is the longest government shutdown, which also plays a part, totaling up to $17 billion per a day. So what the heck is going on, right? You can see here they have a little chart, and that we surpassed $38 trillion in debt. I always show you guys that debt clock. We're at 37 trillion for a while, but we finally passed that mark, and I only see that going farther and higher. And mind you, this is all his opinion, right? I'm going to speak and talk about my own opinions as I go through these posts, okay? Now, at the end, it appears that it is a distant best that this will end, right? The government shutdown. Currently, markets see the U.S. government shutdown lasting until the December 1st per Polymarket, which I can kind of agree with as well. This is also an important day for Chainlink. If you know, you know. I'll leave a video at the end of this video that you need to watch next if you want to know about that. Anyways, this would mark a 61-day government shutdown, or 26 days longer than the current record. The economic implications are spreading, okay? Now, the last time the government was shut down, the S&P 500 was trading at $3,000. It's now at $3,800, points higher in the midst of an AI revolution and a Fed pivot, which is pivot into adding more liquidity into the system, which is good for risk assets, right? With asset valuations at record highs, the U.S. government data has now entered a blackout. So this is what I'm talking about. This is why Jerome Powell came out and said, oh, I don't know if we're going to lower rates in December. It's because he needs that unemployment data, right? You need to make a educated decision. He needs that unemployment data. And when the unemployment rate does eventually go up over this period of time, that's my best guess, is that he will drop rates, right, to combat that. Now, the Fed has already cut rates into the dark, right? We saw this in October on the 29th. Last week, the Fed cut interest rates to 25 basis points due to the weakening labor market. What did I just talk about? High unemployment means weakening labor market, means interest rates will come down, means more money in the system. We just talked about it, okay? The last data point showed underemployment at 8.1%, a 4-year high. So if you think he's not going to cut rates, I am so sorry to tell you, he is cutting them rates, okay? Now, and the implications of a shutdown are now spreading into the day-to-day life. The FFA said that 50% of major air traffic control facilities are short-staffed. Listen very carefully. Nearly 90% of controllers are out of New York Air facilities. Many airports are completely canceling flights, right? He shows a bit of proof here as well, okay? Since October 1st, 3.2 million U.S. airline passengers have been impacted by delays or cancellations. With the shutdown expected to last through Thanksgiving, 3.5 million delays, cancellations are expected in Thanksgiving's week. So this is just compiling on top of the other. That means over 10 million by December 1st. We're also seeing a lot of federal employees that lost their job, obviously, from the government shutdown. They need to get paid and they need to see that money roll in. So once all of this gets figured out, a lot more money is going to be flooded back into the economy that hasn't been being spent in the economy because of the government shutdown. Keep that in mind as well. Federal unemployment claims have skyrocketed. That means it's not official yet, but the claims have skyrocketed. The number of federal employees filing for unemployment has jumped over 1,200% since the shutdown on October 1st. This officially marks the highest number of federal unemployment claims since 2018. And you have to understand that a lot of the jobs in the workforce are funded by the federal government. So if you have a government job, doesn't necessarily mean you have to be in the White House at Congress, right, to be affected. A lot of government jobs across the country are being affected, right? Keep that in mind. So, in a report provided to the Kobayashi letter by Congress Budget Office, the shutdown will now reduce Q4 GDP by up to 200 basis points, erase $39 billion from the economy, delay up to $48 billion worth of payments, delay $23 billion in checks for federal workers, right? He says a shutdown lesson, which I agree as well. I don't agree with people losing their jobs as well. That's never a fun thing. If I was just cold-hearted and only thought about markets, I would say this is I wouldn't even bat an eye. But at the same time, I know this isn't right. So we need to get these people back to work, of course. And as the government shuts down, borrowing is soaring. U.S. debt has risen $17 billion per day, like we said already. Right? That's $30 billion a month in tariff revenue. FYI, deficit of $1.8 trillion that they're already running on. Tariff income is not going to do anything to cut or to take away this government debt, right? We could see $40 trillion in US debt by 2026. Very, very, very possible. Here's the thing I want to say about this post. I love this post. I think this is a fantastic post, and I'm just going to finish it up here before I say what I need to say. China's share of total foreign treasury holdings fell to just 8%, the lowest in 22 years. So China doesn't seem interested in buying U.S. treasuries as well. Japan probably doesn't see it either because they don't see positive. They don't trust that the U.S. government is going to be able to pay back this debt that they're holding. So they're just lowering the amount that they hold of treasuries, which is pretty much aka U.S. debt, right? They're losing faith in America pretty much. That's pretty much what this chart says and what this post is alluding to. And the funny thing about all of this is, before I tie up this specific point that I'm making in this video, you have to understand that the 50-week moving average has always, especially throughout this cycle, has always told the tale. That's a crazy tongue twister, but of where we are in the cycle, intra-cycle, right? And it's funny that I hear CNBC reporters and Fox reporters and people like that saying, oh, it's possible that we get a government reopening by the end of this week. And it's that we have to also, we'd like to close above the 50-week beginning of next week, right? We're talking about November 10th. So it's just funny how all these things are happening at once. You also have the Supreme Court, which I didn't talk about yet. The Supreme Court deciding whether or not they're going to cut off Donald Trump's lifeblood, which is tariffs, right? They're arguing against it, and it seems to be going in the favor of the Democrats at the moment. So we may not see tariffs pretty soon as well. The Supreme Court will probably get this done at some point during December as well. So a lot of things are coming into play, and it's almost as if they're trying to push out weak hands and trying to push out retail and scare retail. Now, remember what I said. I always look for multiple signals to tell me the same thing. There's a lot of things fundamentally that look amazing for crypto, and there's a lot of other technical indicators that haven't broken yet, even though the 50-day moving average is about to break, or it seems like it's on the cusp of breaking. But remember, we don't just rely on one single market indicator. So I want to make that very, very clear, but it is a very important one for the structure of the uptrend that we've been having this entire cycle since the moment we bottomed in late 2022. I just want you to keep that in mind as I continue, okay? Hear me when I say this. Donald Trump wants good for crypto, and this is why he's doing all these things. He's appointing people that are pro-crypto all throughout the US government, right? His entire team is pro-crypto. His family owns crypto. He plans on using stable coins to facilitate the US dollar globally, making it easier for people to buy treasury bills and treasury bonds, right? Making it easier for people in general just to use the US dollar globally. So you have to understand that it's going to take a while for us to get to that point, but all signs point in that direction. So to be honest with you, a lot of this intra-week, intra-month kind of things are pointless. And when you look at the really big macro scale, in the next 10, 15, 20 years, these things will look like a blip on the market. And if you want to prove that point to yourself, go back to what Bitcoin's price looked like in 2014, 2015. And even see if you can see the peak of that market cycle in 2013 on the cycle charts. You can't see it. You can't see any of the price action. It's a blip on the radar. It looks like nothing. And this particular point in Bitcoin and crypto's history is going to look the exact same way in the next 15 to 20 years. Now, the bill that I've been talking about this entire video, let's touch a little bit of light. Let's put a little light on it. U.S. senators push to finalize crypto market bill as shutdown standoff deepens. Lawmakers, both parties, racing to finalize the market structure bill that could reshape oversight of digital assets before election polls stall progress, right? And they want this, believe me, they want to see the US dollar do well. I don't care if you're a Democrat or a Republican, you want to see the US dollar hold its reign. So you're going to have to pass these bills to see that happen. We're going in the digital asset space, and you want to be the number one in this space. You don't want to be second. According to the report, Senate Agriculture Committee Chair John Boozman and he said Senator Cory Brook are working daily to complete their section of the legislation, which would establish a regulatory framework for digital assets treated as commodities. And this is an amazing thing. And Boozman down here also said before Thanksgiving, adding, we're going to get it done this year. And once you see these types of bills get passed, you'll see institutions flood in because they'll no longer be held back by the regulatory frameworks that exist in financial markets at the moment. They'll have more clarity and they'll be able to take chances on some of these smaller altcoins and things like that. Their work represents one part of a broader bipartisan effort spanning multiple committees, including banking and finance, to define how digital assets fit within U.S. regulations and the tax code. It's beautiful. We're literally taking over banking and finance. It's lovely. It's actually lovely to see. Now, the last thing that I like to say to you guys is this is only the beginning. We have a pivotal point on the charts that we have to get through. I'm not so certain we're going to get through it yet. If we do break down below, we're going to have to quickly reclaim this level. But if we can get above this 50-day moving average, I'll say it till I'm blue in the face. We are going to see one of the greatest bull markets we've ever seen. The fundamentals are lining up perfectly. We are only waiting for stuff like this, the technicals, to show that as well. So I love you guys. Thank you for watching. If you have any questions, leave them in the comment section below. Or if you just have any comments, leave them in the comment section below. Subscribe to this channel. We're on a road to 2,000 subs. Yay! Smaller channel, but we're moving and shaking. I love you guys. I'll see you in the next one.